wake up to a little bit of drool on my pillow, feel like it's gonna be a bad day. Yeah, I'm tired of shit, and the coffee ain't hit yet, damn, ain't that great. I don't wanna go to work, cause my boss is a jerk, and I'm not even that paid. I need a change in my life, cause I don't feel alive, and there's nothing that makes me happy. Hold my beer for a minute, I'm about to quit my job, cash in for a ticket. I'm going on a trip and I don't plan to visit. I'm gonna stay there till I feel like I'm winning, and this is just the beginning. I need a big change, help me feel like living. I need a big swing, home runs I'm hitting, and I'll never look back, moving on till I get it all. And we all got dreams, we all want things, but what you gonna do for it? How you gonna move for it? What you gonna be? And do you believe you can do anything? But what you gonna do for it? How you gonna move for it? What you gonna be? My strife, my right to fight, to die on. And this is my game to play, to claim a brand new name, And I ain't gonna lie to you, I'm a bit nervous that I might screw everything up that I've ever done. But what's the point of living if you ain't having fun? I guess I'll try this, try that, might miss, gotta find what I'm good at. I guess I look here, look there, over where am I scared, where am I at? I gotta make it in this life, whatever makes me happy, know I'm doing things right. Sipping in the summer on a goose and Sprite, or find a nightclub for the end of the night, And we all got dreams, we all want things, but what you gonna do for it? How you gonna move for it? What you gonna be? And do you believe you can do anything? But what you gonna do for it? How you gonna move for it? What you gonna be? I work like I got vision I don't need to see. I'm picking mind over matter, I believe in me. I need to find more hours in the day to breathe. Need to find more power in the way I be. And when my mind turns sour with the painful scenes, I need to scream out loud, I can't stop me. I wanna be the greatest like Rocky. You know I leave them all hating like a hobby. I'm out here making moves like a lobby. And if you ain't with me, it's your loss. See, I got my mind on the facts, I'm a python, grab what I like real fast. Took until I have everything I attack, everything that I lack, everything that I want, and I see, matter of fact. Cause I'm my own worst enemy, only if I let it be. I can control anything if I can just think carefully. I control my destiny. Deep up in my mind I manifest it. Every morning I wake up obsessed, and everything I do the best. And deep within my mind, you know I'll always manifest it.
What is going on, fam? Welcome back to another episode. My name is TradeFly, bringing some of the most important market news as well as technical analysis that you can actually use. Bitcoin currently hovering right around $92,000. It has been quite a nice move on the day, but we have some bullish catalysts that we must talk about today. It is very interesting that we saw Bitcoin dump C-Do. We're in extreme fear. Everyone's going bearish. And then all of a sudden, Vanguard comes in and announces they are now pro-crypto. That is a monumental shift. We'll talk about that when we get into the news. But first thing is first, we got to say what's up to the homies in the chat. It's good to see you guys. Much love. Thank you for being here. Man, I am honored. Let's go ahead and start getting it. We got my man Jessica looking here. What up, dude? How you doing? We got Gear. How you doing, brother? Good to see you. We got Offshore Miner dropping the otters. What up, Otter gang? Get after it. Let's go. We got Infinite Team TA. What up, bro? Good to see you in here. And of course, we got the best mod in all of the space. It is the one, the only Alexandra G. What up, lady? Good to see you. All right, who else we got? Scrolling down a little bit more. We got my homie Allset. How you doing? Good to see you in the chat. And of course, we have the lovely Wix wife. She dropped the fine 89, but I've said it so many damn times that I can remember it. It is forever ingrained. But Wix wife is in the chat. What up, lady? She's one of the mods. Act right, she'll beat you up. If not, FJ Trading, what up, dude? He's one of the analysts in my Discord. He's also in Alex O's, and he also has his own Discord. Go check him out. He drops some fire signals. He's good. I like him. All right, here we go. Let's get over to some of the big news of the day. It is going to be Vanguard. They have officially listed BlackRock spot Bitcoin ETF. Trading will go live tomorrow. So this is a monumental shift for Vanguard. Very interesting, right? They have not been pro Bitcoin for quite some time. And I really think that the move today has a lot to do with these two articles, this being the first, right? This is a big shift. And then Bank of America also announcing that clients should put up to 4%. That is a large percentage if you're thinking about some of these bigger portfolios into Bitcoin and crypto. That means they think it is here to stay. They believe it is the future, ladies and gentlemen. All right. We knew that, though. We've been here for a long time. Let's go over to the bubbles. It's a sea of green out there. We love to see it. Let's see what's diverging from the market, though. We got ZEC down 2.1%. That has been a little bit of a fall. Leo down 4%. XMR down 1.7%. And Dash down 2.1%. We got some big movers, though. Pingu up 27% in 24 hours. Let's go Sol for a 12.8% bounce. Pump, who cares? Sui, 21.3%. Man, is looking good. A nice little recovery. Again, I think this is a news-based move, and we will talk about the technicals here in a moment and see where we think this is headed. All right, over to CoinMarketCap. We got Fear and Greed Index sitting at extreme fear. That will update today. Trust me, that could be a substantial move to the upside when we're talking about the Fear and Greed Index. Total market cap over that magical $3 trillion level. We love to see it. That is up 7.73%. That is the total market cap. That, ladies and gentlemen, is a big move. All right. That being said, Bitcoin 91,723 now just down to 1.8. That is up 7.32% over 24 hours. Ethereum is at $3,010, and that is up 9.34%. Those are your two big dogs in the space, if you know what I'm saying. But pretty nice moves. And you know, one thing that we did talk about is Bitcoin dominance. Bitcoin dominance is currently sitting at 58.9%. No big move there, right? And what happens when we see Bitcoin dominance maintain its current level? We see things move in parallel. Proof in the pudding, ladies and gentlemen. Here you go. So Ethereum has moved 9%, Bitcoin has moved 7%. All right, you're not getting that exponential move one way or another, or that divergence. So for those that are in altcoins, that is what you want to see. You do not want to see this Bitcoin dominance taken off. Right now, it's just kind of status quo, hanging out and chilling. Let's go over to the next segment. That is the one that you guys love. That is going to be the Daily Degen. Here we go. The way this works is I allow you guys the audience to vote whether we go long or short. So when you see daily degen and you see that little vote button, it looks like 78% of you right now are saying moon. You guys get to pick which way we go. I'm not gonna go get any coins anymore. I'm just gonna stick it with Bitcoin, man. Stick it with Bitcoin. That's the way we're gonna roll. But we are gonna 20x it. We are gonna 20x it. All right. Here we go. 20x. No, this is not how I normally trade. Before you got some snarky little ass comments, but we do like to have a little bit of fun. All right. So we're gonna go ahead and we're gonna do what you know I do, and that is I'm gonna put 5 on it. All right, so this is real money, but that's why I'm only using a little bit of capital, because we're just having fun. Look at you, y'all down 70% now. We got some bears moving into the room, bringing you down just a little bit, but there's no way you guys are gonna catch up. There is no way. So long it is. Here we go. We got a market position. Let me just make sure I'm not in cross. We are isolated. Okay, because sometimes when you log back in, for whatever reason, it'll go back to its defaults. That can get a little weird sometimes, especially if you're cross margined. All right, so we have that in. All right, again, this is not how I normally trade. This is for fun. This is for you guys just to enjoy the day. Let's go ahead. We'll put a little stop loss here. We'll put it below that one right there. That would be a 10% move, and that would be a 10% move. So pretty much a 1-to-1 50-50 shot here on which way we're going to go. I will say, just looking at it quickly, not ideal. You got a little area of support here, very small little area of support. Again, this is smaller time frames. This is a 5 minutes, but here nor there, you got a little bit of resistance. So you pop through that, I think you'll move back up, no problem at all. But right now, if you stay below and you start getting some candle closes below this range right here, or this level right here, that could go to the downside. All right. Let's go ahead and keep it moving. Let's get over to the economic calendar. And I'm not going to read through all this. I usually read through this. I've gone back into analytics and I've seen you guys don't like it. It's usually one of my down moments in the show. So just know, federal interest rate decision, FOMC, all that bull poopy, we'll say, federal press conference, that's going to be on December 10th. That's the big one. That's the big one. Write that one down, because that could shake the market a little bit depending on what happens. Let's go over to the liquidation heat map. You guys know I love this thing. All right, so why do I love it? Because that is part of my trading strategy. I look at liquidity. I want that thing off the table. I want to get rid of it, and then I will assess whether I take a long or a short, or my bias at that point. So coming up, you do see some liquidity sitting here at about 94K. That's the big thing of note there. It's up at about 94K. So can we get a nice move to the upside, SFP off that, and then work our way back down? Yes, that is something that you look for. However, that being said, I would say that 92 to 93 key, that level is pretty key, right? So if you get up and you push up into that liquidity, let's go over to the chart just to kind of tie it all in. If you push up into that liquidity, let's go ahead and move this up here. Move it up, move it up. Let's go coordinates. Let's just say 94K. All right, 1, 2, 3. Got it. We'll bring it up there. All right, sweet. So this will help me explain what I'm talking about. So you have liquidity, right? You see the green, 94K. You have your monthly pivot. You got where we had the previous 618, the golden pocket. Cool. That's not as applicable on the way up, I understand. But you also have this trend line working its way down. So there are a few things that could potentially set you up for a short trade. Why? Why would that set you up for a short trade? Because the structure right now, even though we're macro bullish, the structure right now is actually bearish. So yes, we're getting a push up. Yes, we have news, but does that necessarily break the trend that we're currently in? I'd say no, right? Yes, you got a bullish catalyst. I get it. I get it. I love it. I want some more of it. If you guys know that song, you know, that's probably before most of your times. But here nor there, if we continue to push up and you get that push through this liquidity, and then you come retest this zone right here, problem is, you're going right into resistance again. And I think that 100K level is my line in the sand here in the near to midterm. 100K, right? A couple different reasons. One, top of the channel, you got a horizontal level, you got the 618, you got a psychological area, you got a previous trend line. There is a lot of confluence in that area of 100K. So if you push up and you get that retest and you start to push back up again, right? You see the buying pressure coming in. Yeah, you could take probably a quick long up to that area, but that is where I'd be done. That I would not try to flirt with pushing past that, because I would say the odds are you might get caught with your pants down and you could round trip it, because that is a very strong level. All right, so understanding that that's a strong level, we front run that a little bit. You're looking at more about 97, 98K from that press up to about 93. Not a bad trade. Not a bad. There's money to be made in here. You just got to be really, really careful with it. Let's do a little bit of measurement. Let's say we're slow to the game, 2.72%. Throw a little leverage on that thing, about 3%. I wouldn't do anything too crazy, but that's not a bad move, right? You're talking about about 7% or so. There's nothing wrong with that. All right, take your base hit, walk away. Don't fight the structure, right? Because that's one of the biggest things right now in this market. When your trend is clearly bearish, do not fight the structure. Don't fight the structure. Wait till we get a change of character on the daily. That means we break out above 100K. All right, we reestablish the range in here. You can see very consistently there was some price action that has honored that level, about 98 to 100K. You break through that level, and then you're looking for a breakout retest. All right, so there's different ways to skin the cat here. Different ways. All right, so it's not he said it could go up, he said it could go down. What are we gonna do at 100K? It's not about that. It's about, okay, let's observe what happens when we get there, and then we make a decision. So if you get an impulse move to the upside, it means you get a real strong candle. You see a candle that looks a lot like this, all right? You see a candle that looks like that and breaks through this area with conviction. You hear people talk about that all the time. They're talking about candles like this. This is a very bullish candle, right? Obviously, it is swallowing the previous candle. You don't get much more bullish than that. So you get a strong candle through the zone. All right, then you're looking for that retest, all right? Retest to the 100K level, and then you can look for another long position. So quick long, got it, cash out, and then you look for the next setup. Let's fix that. There we go. And here we go. So you would probably see something like that. And that is a conservative way to continue to play the game. But what happens if we get rejected? Let's say you took a long position, you get rejected from this level right here, all Gucci. It's all Gucci. One, it stays within the structure, so it's kind of expected or thought to be expected. I say the probabilities are skewed to see a rejection out of this area. You're already closed. You took your profits. You walk away. You live to fight another day. It could come all the way back down to the 618 and retest this level here, right? You're starting to see what was resistance. It could come back down, retest it again, right, for a second time. And then you're seeing, hey, cool, like, do we actually break out of this trend? And you're kind of evaluating it as you get maybe some horizontal movement on the charts, right? You get a period of consolidation, a range. We're cool with that, okay? We're good with that. And then we start getting kind of that stair-stepped approach up, vice down. And that changes the game. All right, that changes the game, but we don't get confident about that game really changing until we get, in my mind, you could argue with me, you could say I see it a different way, and that's fine. But for me personally, over 100K really changes the narrative in terms of the structure of the move that we're currently in. Okay, so that for me is kind of my, like, all right, bias might be flipping. Right now, short bias, it's been a short bias, and it is what it is. I'll take longs within the structure, but again, I am not, do not fight the structure. All right, that's a way to get upside down and trades really, really quick. Okay, so that is that. Zooming out, we've talked about this before. I'm not going to beat it up for those that are new, haven't been around. Your pullback from here about 30%, pullback from here 30%, pullback from here about 35%. All Gucci. You came down to the median channel, flight corridor, we call it, yearly pivot, as well as the bottom of the platinum pocket. There was a lot of confluence right here. That's why the green arrow's there for some hopium. And I posted that on X probably 2 weeks ago. I was like, here's your hopium. And that area for me was an area that I've been kind of keeping a keen eye on. I don't think it's all over. And I said that. Even though we lost this trend line, this is where everyone flipped bearish. They lost the 50 SMA. Everyone just kind of flipped bearish on us. And I wasn't out. I wasn't out because we did not really close below this level. And until we really close below this level, it's kind of hard to say that the trend has, really, I mean, obviously this trend line here, I get it, but like, it's still a higher low. No matter how you look at it, it is still a higher low to this point. So here nor there is some hopium. All right. But if you see a rejection out of this area and you start working your way back down again, then, it is what it is. You see a lot of times you get these news driven moves with not a lot of fundamental basis or technical basis, we'll say. and then it ends up retracing, you know, pretty much right back from where it started. So that is how I approach it, right? I try to stay within the structure. I try to take quick positions. I take my base hits. I live to fight another day, and I look for the next setup. So Bitcoin right now, that's what I got. Let's look at the USDT dominance real quick. Sweet. So you're starting to push down. I remember talking about this level here. You got the 21 SMA. Got it. Cool. That would provide support. Remember the inverse correlation, man. We had this mapped out for a minute. Was it perfect? I mean, did I get the exact angle right? No, but you came down to the 21, and then you got that bounce here, came back up to resistance and got rejected. So remember, inverse correlation, you get to an area of resistance, you go and bounce that off of where is Bitcoin, right? So we have the benefit of hindsight. Let's go ahead and take advantage of that. All right, keeping it transparent. Not like I'm sitting here saying I called everything. We did talk about this coming back up and seeing that rejection there, and then cross-referencing, right? Always cross-reference the other charts. So you had resistance for USDT dominance, and this is how you, if you're like, what does this matter? Why is it applicable? Because there is a deep inverse correlation between dominance and Bitcoin. So resistance, got it. Bitcoin came right down to the 0.786. Well, that's a macro one. I'm not too overly concerned because you already come down, but on this smaller one, right, you got this bounce out of the key level, and then you got rejected, 92 to 93. We already talked about that. But you came down to the 618. You actually came down to the golden pocket. So ignore this one. Look at this one. I know you got lines on top of lines right now. I am sorry for that. Wish I was better at charting, but, you know, here we are. So came down to the golden pocket, and you got to bounce out of that area. So you came down to a technical area of support, and if you extend this previous trend line, that's kind of in the vicinity as well, right? So it came down to that area, closed above, got it. So there is a little confluence between the charts. Definitely. If you're coming down to the 618, and then you're going to the USDT dominance and seeing a rejection there, let's go to the total market cap. Let's see what we got going on here. So good. You know, you're getting back above this level here. You want to get above this. And I've been saying that's, I think, a pretty important level. We'll extend this out just a little bit, getting within that trend line. 21 SMA is acting as resistance right now. That's kind of your big issue, we'll say right now, for total market cap is that 21 SMA. But you keep testing it, and it is trying to break. And if it does break, then that's going to be a good thing. I think that brings you up probably about 3.21 or so. Just looking at some of the structure, that would be quite nice, and then get you up to about the golden pocket of this move. So keep an eye on that. You can see right here, very clear horizontal levels of resistance and support before we actually had that breakdown. But then this is, I know that people are going to look at this area right here as the catalyst, or kind of as their change. I would kind of be against that and say move it up a little bit here. I think this is the more key level at about 3.2. But again, you're going to then start running into moving averages acting as resistance. You got the top of this channel as well. Let's go ahead, bring that one out just a little bit. So there you go. So that's where this is more of an area that I would be concerned with than anything else. So let's go ahead and move this in right there. So you got the golden pocket. You also have the top of the trend line right there. So right here for now, this was a little in flux. I wouldn't get too worried about that. In terms of the support here, but what you like to see is get a little push up and actually retest the top of this. When I say the top of this, I'm talking about where this rejection was and where the 0.5 is currently. Get on top of that, retest it, and then you look for a small move to the upside here. Not something that you're necessarily going to play with in terms of like a trade, but it helps you kind of find a little bit of confluence when you're looking at the charts. When you take the confluence between the three charts, that really paints a more clear picture for you in terms of, hey, am I coming down to a significant area of support or resistance for some of these, well, for Bitcoin specifically, for crypto. All right, let's look at the chat. I've been neglecting you. Hey, we got Melissa in here. One love. What up to you, lady? Good to see you in the chat. Thank you for being here. We got my dude, Al Jr. We got to scroll up and find what he's got. Because I know he's gonna leave something. Hold on. Did I get the music down? All right, I did. Whew. I was about to say, I hope I haven't been blasting your ears the entire time. Let's go ahead and scroll down here. Working. Oh, Message deleted. Let's see. We got my man Harp in the chat. What up, bro? Good to see you. We got Crip Dog, Monero XMR. Waiting to buy. Inverse Head and Shoulders. All right, right on. We can look at that for sure. Charles, what up, man? He said, Otter gang. We got B-Team Crypto with a gang. What up, dude? Good to see you, my man. Good to see you in the chat. Much love, bro. Here we go. And then we got my dude, Andrew Cameron, the GM guy himself. All right, keeping it going. How you doing? Keep it moving. All right. Bitcoin pulling back a little bit. I think you guys are long. That might not be good for the daily DJ, and that's probably upside down. Is what it is. All right. Let's go. We'll go Ethereum, and then we'll go Monero. All right, this is what I've been looking at for Ethereum. Now, you guys know 28 to 2900. I've been singing that song for months upon months. Let's keep that open. I forgot. I got my setup here where I'm on the side. So looking for you to kind of break above and stay above this key horizontal level of 28 to 2900. That's what you want to see. Obviously, we got a little bounce in here. Structure very similar to Bitcoin. Lower highs, lower lows. Again, I wouldn't fight the structure too hard. I see a move up to 3172. Well within reason, but I think there's, you know, the nice little horizontal there, and there's an opportunity. Just like Bitcoin, you get over, I think, 92 to 93. I think you're going to see a similar move for Ethereum, similar structure. I think 31 to about 32 right in this area here where this arrow is. You can look for that breakout retest, continuation to the upside, and you could probably take a picture, but look at this, man. You got the 0.5, you got the 200, and you got the 50 SMA all aligning on the daily right now around 34 to 35. Okay, so there's a lot. Again, it's like very similar, right? Bitcoin has a ton of confluence around that 100K region. I think you're going to see some similarities in Ethereum around 35 to 36 in terms of seeing resistance in that area. And again, it's all aligning, right? So this is a way, if you guys have a 9 to 5, if you can't do this every day, this is not your day job. This is how you get ahead of it. You start finding these key levels, and then you start finding confluence between the charts. That is how you can kind of get ahead of it and be like, hey, I anticipate if we come up to this level that you could potentially see a rejection, and you're ahead of it. So then you know, like immediately, if you see that SFP, if you start seeing some of your indicators align and add confluence to what you're looking at, then that could be an opportunity to take a position. So you just set an alert. Like that's mostly what I do, is I mostly set alerts. I'm not a big limit order guy. So that also means I have to be awake, and it also means I have to be available. So I do miss trades, but I don't like to blindly limit into positions because that takes away the capability to analyze the reaction to a key level. All right. So that's a really important part of it, right? Because you have to see, and this is why, like, when I'm trying to do some automated trading strategies, and part of that is building in that into the entry, is like, okay, it must be, you know, a swing failure pattern, or you must have this wick that retraces a certain amount, percentage retrace of 50%, whatever the case may be. There's things that have to be built into that to kind of automate this process, so we don't have to be by the charts all the time. So that's, gosh, one day, what I'm gonna have to do though is I think I'm gonna have to pay for an API from one of these exchanges, which is gonna be expensive, but I'll know where the liquidity is at, and I can build that into it. So it will evaluate, hey, there's liquidity here. And then, you know, if you see the reaction in terms of the candle structure, then you can actually execute this trade. So here nor there, resistance is what I would anticipate for Bitcoin, or not Bitcoin, for Ethereum when it gets up to these levels. And again, there's confluence between the charts. Keep that in mind. I think if you were to take a long position or in a long position, that would probably be a solid place to take profits. And not, obviously, you do you. But if I was in the trade, that's probably what I would be looking at. Okay, so that area at about 35, maybe even as low as 34, and that's really, it looks like a very strong level. It just come back up on the charts. Very low. You can see a lot of bouncing around in there. See support, and you see breakout retest continuation. That solidifies. That solidifies that area all around 3,500. Okay. So that's what I'm looking at on Ethereum. You know, same for Ethereum as Bitcoin. All right. You can see push up, consolidation, push up, consolidation, push up, consolidation. Yes, they're gonna loosely mirror each other. even though I would say from like here to here was probably a stronger move. But let's go on to Moreno. It's XMR, right? Let's see. Do I have... Oh, there it is. Cool. Nice little move off the 200. 200 seems to be that key level for XMR. No doubt about that. You can see it's kind of hovering around, right? Support and resistance very, very consistently. Even with that big retracement here, down to about 321. That's where it got its bounce, and ultimately a really nice move. That happened in, let's see, a couple weeks ago, it looks like. So 21 November. I do like this level here, this horizontal level that plays into the 0.786. 50 SMA is pretty close, and I mean the horizontal is really clear here, really clear at about 350. I like that level, and that would keep you structurally sound as well, setting those higher lows, higher highs, really just kind of keeping that trend to the upside. But it's not all lost, right? This would be one of those ones where if you are bullish on XMR, that you can ladder into a position. I think if you were to come down here, hey, nice little buy level at about 35 or 350, and then you're looking at the 200, right around the 200, about 324, 320, right in that area, and then you just bring your call spaces to the middle, and you're anticipating that the trend continues to the upside. I mean, it's statistics essentially, probabilities, we'll say. What is the likelihood that this continues to trend? I would say, for me, I would be okay with kind of sticking with the trend right now until we see something different. You'll lose the 200, you start getting candle closes underneath the 200, then you get scared. And then you have to start coming back to be like, where do we see, very significant levels? And I would say all the way down to about 243 is really that area that you see a really prominent horizontal level with both support and resistance in that area at about 240 or so. All right, that's kind of your next level down. Once you lose the 200, I won't say the next level. Let me take that back a little bit. Not the next level down, but that's your prominent horizontal level that I see on the chart by just zooming out. But right now, it does look structurally, it looks bullish. Okay, so if you're in XMR right now, mind at ease, looks pretty bullish. But you can see a lot of selling pressure came in here when it had that big push up. I'm assuming that's the all-time high. Let's just zoom out a little bit. Nope, it is not the all-time high. We've seen it go higher. But there's clear selling pressure that came in here. Now it's just working its way back up again, retesting. So you could see a continuation of people, taking profits as it works its way back up each time. Not ideal in terms of structure, but it could open up some opportunities for you to ladder into positions or accumulate some XMR as it works its way up, right? So having some line in the sands, having a little bit of a plan there to execute, or to accumulate is very important, right? I kind of stick with the technicals when I'm looking at this stuff. I don't get behind. I don't know anything about the project, just for full transparency. And I'm not going to make any kind of wild moon boy projection that this thing's going, over $500. I'm just going to be like, hey, here's a solid technical level where you could accumulate. Here's another solid technical level where you could accumulate. And, here's probably the last one that I would look at between, some three places that I would look, right? This one's more like, hey, I think this trend is going to continue, or this momentum is going to continue. And I think it's going to stay bullish and keep going, keep getting on, right? And then if we lose it, boom. And then if we lose that, boom. Now, understand this can totally be a recipe for disaster in terms of hey, you ladder into position and this thing just dumps to zero. But that's, at that point, it's like I made a bad investment. So that is why when I DCA into these, keep this open here so you guys understand, I don't bag in, right? I'm not taking my whole portfolio and be like, all right, man, I got 100K on the table and I'm going to put 30 here, 30 here, and 30 here. I'm not doing that, all right? So I have my portfolio, and usually when I'll DCA into something like this, I'm putting a small percentage of my portfolio. I typically use about $1,000 each time it goes to a key level, and then lowering my cost basis to the middle or around the middle a lot of times. I'm assuming are making an assumption that we can get back up to that first entry. That's a very, very key part. All right. So to go back and to kind of show you, like, if we start here, and I'm just saying if we start here, I'm not saying that's what I'm doing for XMR, but if we start here and then we lower our cost basis to here, or not lower, but we take a second entry here and we bring our cost basis to somewhere in the middle there, my assumption is that we go back to here. And from here in the middle to here, where we entered the first entry, that is my assumption, that we'll go at least from the middle to here. So again, like, if you really want to be conservative about it, then you would probably put your stop under the 200, and that would be it. You wouldn't try to make a play down here. You could just do a separate entry for that. You know, when we're talking about the 240 level, the conservative way to do it, right, to have a plan, is that enter, here's your cost basis, here's your exit. All right, understand that this is your exit. So from the middle, the median of these two entries, that would be profit. So what does that look like? About 335 up to there, about a 4% move. So that's one of those ones, like, if you want to throw a little leverage on that, understanding that your percentage move is rather small, 3x is probably about as high as I would go, especially because just understanding, like, hey, if this thing is just working its way down and losing key levels, you got to be careful. All right, statistical probabilities are skewing outside of your favor once you start breaking some key support levels. But here or there, that's kind of the way I would approach it personally. And then if you get the bounce out of there, cool, man, all Gucci, all bullish. If you get the bounce off the 0.786, this horizontal, that's all cool. Like, you're not gonna be mad at that. And then it's just a matter of, like, where do you want to get out? Do you take your TP1 at the 0.66, or do you TP1, TP2? That's kind of up to you on how you play that game. That's kind of, the next piece of it is, where do you realize these profits? For me, my kind of style, I don't typically TP1, TP2, but obviously there's fundamental, basis for doing that. I would probably just take it up to the 0.66 personally. So from about 355 to about 372 is, it's a pretty decent move. Let's even go to the bottom of the wick there, 4.55% with 3x leverage. You guys can do the math, but that's 13%, right? That's a good trade. That is a really good trade, and you would probably be able to execute that trade in less than a week. So in less than a week, you're keeping up, man. I mean, hit your singles. All right, so that's what I'm looking at for XMR. Let's see here. Let's go back to Bitcoin, because I do want to bring in Market Monkey Terminal. I think that's what it's called. I like that. All right, so we talked about that 92 to 93K region. This is where we shall learn. All right, that's where we start learning. So 92 to 93, that was an area I was looking at. Is this? I don't even have the right chart up. There you go. Right there. I might go to a smaller time frame now, because we're starting to see inklings of it already. Yep. So confirmed SFP on the 4 hour. All right, so you have a SFP on the 4 hour, starting to work your way down. You would expect that on the lower time frames, you're going to start seeing the RSI bend over a little bit. Boom. There you go. Right? You go down to the 1 hour, you got overbought, you got a reversal. You can see the RSI trending down and an SFP on the 4 hour. So then we go to Market Monkey Terminal. What are we looking for here? Well, you got a little spike in open interest. All right. Now that can be deceiving, because that doesn't mean, hey, we should just start going long because open interest is spiking. It can spike before you can go short or long. Right? So you got to understand what's happening there. That means that people are more interested in the trade. And so, and that's very simply put, just so you understand, like, it's very simply put, like, you want to see open interest moving up, but that could also be that means we may be going short. Now, how would you kind of balance that off CVD? All right. So if you're looking at CVD, good thing here that happened. is that you did set a new high, and that you haven't seen, much of. All right, it has been trending downward for quite some time. Problem is, when you really zoom out and look at it, that don't look good. Okay, like that does not look good. This would look much better if you did get over some of those key levels. When I'm talking about 92 to 93, if you got over 100k, this is going to look markedly different. So right now the trend is down. Okay, so that is, if you go, let's go to a lower time frame, start looking at that. All right, open interest working its way up. That's now kind of nice little, that candle right there is dying out with the price. But let's look at CVD. So CVD is starting to break a little bit. All right, if you're looking at the high here, but now it's actually coming right back down to that high. So that is not ideal. Not ideal. Coming over to the delta. The delta is ugly AF. It's covered by me right now, just so you know. One of the things you do look at is the delta. How big are some of these cells that are coming in? And it is hugely red right now by a mile. It's not even close. So CVD overall looking kind of bearish still, to be honest. Shorter time frames, it is starting to get a little momentum. It's trying. But that's kind of what you want to keep your eye on. If CVD starts dumping and it continues the trend that you're seeing where it looks rather bearish, this could just strictly have been a news-based pump. Because you really want to see some, I won't say divergence per se, but you want to see CVD start working its way up. Like where you see it working its way down, you wanted to see it working its way up. And that gives you a little bit better feeling when you break through, or if you break through this 92 to 93 zone, right? You want to see a continuation of CVD setting some new highs. You do, once you get that breakout retest, all right, you want to see open interest moving up as well. So you want to see a little bit of confluence between the two of these. This is tough. This is tough. And you are in the high volume node right now as well. So basically fair value on the 4 hour. And all depends on how you skin the cat there. You can move this. You could cherry pick this if I really wanted. I'd cherry pick it. Look, I'm like, oh look, okay, cool, validation. But one of the things I'm looking at here is there is some liquidity to the top side, and this is important to me as well. 908, that's a healthy chunk. 646, 908 is a pretty nice chunk though. So that's where you got to be careful. You come up, you grab this liquidity up here, and if you see like a SFP on the daily and it comes back down into this range, that for me would pretty much signify we're going back down. Now, if you see a nice move up, conviction, a large candle, breaks through all this liquidity, then comes back down and retests, the top of that area, 92 to 93,000, then I would anticipate us moving up. But again, you're going to see CVD. This is a good, you kind of balance these two things, right? You look at CVD, and if you start seeing that working its way up, that gives you a little bit more of a confirmation bias, if that makes sense, once you get over those key levels. So that's kind of how you can tie this in. I do like Market Monkey Terminal, for just kind of getting, a little bit deeper in the analysis. I don't really like the CVD setup that they have in TradingView, and I think the data is a bit more accurate over here. I almost bought Market Monkey Terminal, but I ended up not doing it. Here nor there though. TV timeout. If you guys are enjoying it, please, as always, like and subscribe. I would appreciate that. That helps me out a great bit. Trying to grow here, bringing you guys some of that alpha. And let's go. Oh yeah, so the daily DJ, that is poof. I went back to check that real quick just to be like, where's that at? And there is no open position anymore. You can see it's sold right here. So we set our stop loss right there. All right, this is very important. Okay, so making sure you guys got a good stop loss. Risk management. Let me say something real quick. If you guys are following people and they are not practicing risk management or even talking about risk management, like, I'm not saying like follow me, I'm that dude, but please stop following those people. Like, I don't care. Like, you can find you. Alex O's my dude. He's good. Kyle's good. Like, Piper. Like, if they're not talking about risk management, please, for the love of God, if they're not telling you protect your capital, please move on. All right, please move on. Anyways, so let's go back here real quick because we can always take lessons, right? It's always important for lessons, right? And obviously this is a daily degen. We're just winging it and having fun. That's what I do with the daily degen. But we put our stop loss right here. Why? Why did I put the stop loss here? Because I was looking, right? Resistance, support. That's a horizontal level. And what'd you get? Not only did you lose it, but you got a breakout retest continuation. All right, so it made a lot of sense to have a stop right there and then ultimately move down. So if you were not, like if you didn't put a stop loss right here, what happens? Now we're double in the hole. We would have been double in the hole. Instead of 10%, would have been like 20%. All right, because remember, that was a 20x play. So then, what are you seeing here? That's not ideal. That is not ideal. Breaking this level right here, and they can get a retest continuation. So that's the 5 minute. Let's go back again. Just kind of looking, going through the thought process here. I don't know, man. SFP on the 4 hour? If you get a bearish engulfing here on the 4 hour, that might be something of note. What was the liquidity looking like as we pushed up? Let's go back to a Market Monkey. So there wasn't a lot of liquidity up here. It had already gotten taken, right? You had 1.14K, so that got taken, and this liquidity has moved up. So what was here? These people. So understand how this works. A lot of money there. And this is spot on Binance, just so you guys know. I think, is this? No, this might be futures. Might be futures. So what is this? How do you read this? This is important. Obviously, there was a lot of liquidity in here. When I say liquidity, like these are positions like that were going to get stopped out or liquidated right here at about 93,000. Stupid round number. Stay away from those. But came up, wick down. This is a setup right here. SFP, bearish engulfing. See ya. Never even reclaimed or came back up to the top here. So this is what happened. This would be like a little bit of a TradeFly setup, right? This would be me up here because this one got hit and you got the bearish candle here, and you would have taken a short and you put your stop loss above that wick. Now, why does it disappear? And this is an important part. You're probably like, well, why is it gone now? Well, because they've taken profit or they've closed the trade. All right. Or, they've added to the position and they've moved their stop loss up. There's a combination of things that could happen, but most likely they entered the trade aggressively, took a short, that played out, and then they exited the position. That's most likely what has happened. Or they see it starting to trim back up, right? Well, they still would have exited the position, but they see it starting to work its way back up. Got a little V shape here, breakout retest of that little horizontal there. And then they're like, yep, I'm out. I'm done. And they close it, and this liquidity goes away like magic. So keep an eye on that for sure. But your high side, about 94.5 or so is really where you have some liquidity sitting again. To the downside though, this is starting to pop at about 90. That's kind of fresh. Right there. Now it's not as much. It's not as much liquidity that's sitting up here. Up there you got about 1,000 right here. Or no, that was 600, right? No, now it's about 1,000. It's 900 now. So this one's 387. But to get that push down, right? Take that liquidity off the table, then push up. Why not? Seeing a little bit of buying coming back in on the delta here. That's good. But yeah, again, you want to see the CVD. You want to see a continuation of that moving to the upside. Alrighty, what do we got here? 12:45. Go to the chat real quick. Uh-oh. All caps lock. Let's see what we got. Scrolling down. Liquidity. I know you guys are always messing with me, the liquidity. Vegas Claw, what up, man? Thank you for being here. Much love. Oh, we got last one standing. What up, bro? Bear market was confirmed last week for me as the second weekly close never recovered or gave us a bullish confirmation. What you think, TradeFly? Yo, so, I mean, a lot of people called bear market when it went through the 50. I mean, like, they were just like, all right, bear market. This market, though, is something we've never seen. Right? You do need to recognize the fact that there is institutional money in this cycle that we did not have last cycle. It was retail. It was retail just getting clowned and getting punched over and over again. This is different in terms of there's big money. There's big money in here. So if you're a 4-year cycle guy, the 18 months is up, right? We theoretically should have hit the high about 18 months past the halving. That's passed. We did have all-time high about that time. Weird enough. And now we're having a pullback. Just kind of it's kind of on schedule, to be reals with you. I don't say bear market right now. Not yet. And I'll show you why. It's a little bit of what I talked about earlier. But if you follow this channel from 2021, I'd say we're looking good, man. You got your high to high in 21. You got your swing low. Got it. Median of the channel here. Yearly pivot. So all we did was set a higher low, and we bounced off the median of that channel. And if we maintain the median of this channel, in my mind, at a minimum, I think we're okay. Even if it were to ride up to the median of this channel, ultimately that's going to still continue to stair step you up. And one of the things that, I like to point out to you that is kind of like that is the NASDAQ and the S&P. I think we're starting to see that parallel between Bitcoin and some of the traditional markets where, people are getting into it as an investment. And so, it's not like it used to be. This was a YOLO speculation play. It is not that anymore. So, I'm not going to be like, hey, the 4-year cycle is broken. I'm not going to go that far, but like it's going to move with the market. So if TradFi, like if the macroeconomic picture, pulls down the market, it's going to pull down Bitcoin too. Like hands down, Bitcoin will come down. Like it's no doubt about it. But is that because it's Bitcoin, or is that because the market's not looking good? So you have the end of the quantitative easing. We're getting the rate cuts. I mean, that's continuing on. There is some ugliness in the economy. There's no doubt about it. There is some ugliness, and that's kind of like your risk part of this, and that's why for me, I tell people all the time, where do you think Bitcoin will be in 5 years? And ask yourself that question. Where do you think it'll be in 5 years? I can say that unanimously that we're all going to say in 5 years, Bitcoin will be higher than where it's at right now. And that's why a lot of times I'm like, you don't even have to follow me. Like, I like to trade. I like to do chart art. I'm pretty good at drawing some lines on a chart, and I can articulate it. But if you just DCA in, doesn't matter. Like, you could do it monthly, weekly, however you want. If you DCA in, you're gonna win this game. You will win. Like, I'm not gonna say I promise or guarantee. I would never say that. But if you DCA in, you will win this game. All right, and understand that is the most tried and true, proven strategy in all of investing. And if you look at some of the bigger guys in the space, like when you start looking at the Warren Buffetts of the world, those people acquire assets and they continue to invest, and they are big believers. And some of them, right, they want to take those dividends, reinvest it in. What are they doing? They're compounding. You get compound. The compounding effect of your investments over time is enormous. Like, especially when you start getting up to those higher levels of capital, it gets crazy. Look at the curve. I challenge you guys, look at the curve when you're looking at compound interest or compounding effect of your investments. It's insane, especially when you get in those later years. Start now. And I know that doesn't work for everyone in everyone's situation, but you know, I told a guy in the Discord, he was paying for the Discord, and I was like, bro, this probably isn't your place, right? I say, take the money that you're investing in me to draw lines on a chart and just put that money every month into Bitcoin. Just put it into Bitcoin. And you will see more from that than anything else that you can do. And this, my friends, is why I don't have a big following and I don't make a lot of money doing this, because I keep it reals with you. You know, like the trading thing is fun. You guys are fam. I love interacting with you guys. But when it comes down to it, like, I'm going to keep it real with you. Like, anyways, long-winded and me straying off. I don't think it's over right now. I don't. Not yet. We have a bearish trend within a macro bullish trend, right? Like, if you zoom out, still bullish. Yes, we lost this trend. Yes, we lost the 50 SMA. I got it. I understand. It's the first signs that we could be flipping bearish, right? Like this, you should have a bearish bias. I mean, like a short bias from this trend, this structure right here. If you're trading, let me say it again. If you are trading, having a bearish, you know, a sentiment or a short bias, I get it. It makes total sense. It makes total sense. But if you are investing, then we're still bullish. Not till we start setting some lows, closing below some of these key levels. And I would say specifically, if we close below, you know, 74, that's when it gets weird. Okay, it close below, not a wick down, take liquidity, because there's a metric F ton of liquidity sitting here, because all the people that entered right in this area, probably some institutional investment would be my guess, right here, from $73 to $76,000. If we take a wick down to clear out this liquidity, give the the bigger money, the institutions, the whales, another opportunity to get in right there, they're gonna jump on that. They're gonna jump on that. But I don't think it's done. But if we start, again, candle closes, we start breaking down, and you start seeing structure lose, you know, like that 73K level, cool. Yeah, like, all right, cool. Full on bear market, whatever. Like, but it doesn't matter to me, because I'm going to keep buying. Like, I'm going to keep, like, lowering my call spaces. And that's kind of the approach I started taking. I was like, all right, cool. Bitcoin came down, like, 4-year cycle. We start laddering into positions now. We're setting ourselves up for the next move up. And that's the difference, right? I'm giving you a plan. It's a DCA plan of sorts. It's just I'm using key levels that have a lot of confluence to build my DCA plan. I'm not just doing it weekly. I'm not just doing it monthly. You know, I'm saying, hey, cool, we got a key level. Got it. Boom. We got a key level. All right, got it. Boom. We got a key level. All right, got it. Boom. What do we end up doing? Bringing our call spaces down around here. And then we can have a nice decision of like, hey, we come back up to our call spaces. If it's aligning in a technical area, you know, let's say that, you know, we end up bringing our call spaces down here somewhere, and we get here, like we have profit from here to here. And then we can continue to play the game. You're like, well, what if this is the biggest swing trade and you said it's investment? You can hang on to it the rest of your life. Got it. Cool. But you got to realize profits. You do have to realize profits. So have a game plan. All right. Come back up. Sweet. You can take some profits, or you could essentially exit and then, sorry, talking fast. That caught up. Let me get some water. All right. So you got to have a plan, right? Until you come up to a key level where you can then say, all right, I can take my profit. I've lowered my call spaces to sub 70K. This is only just an example. I've lowered my call spaces still below 70K. We had a push up. We got 10 to 15% profit, whatever. You can realize the profit or the gains there at that level. And then you look for a breakout retest, continuation. right? So breakout, retest, continuation, and then you can get back in, right? So you're minimizing the amount that you're exposed when you're hitting a key level of resistance, all right? And then you're giving yourself the opportunity to get back into the trade and continue to ride that thing. So like that's, you know, there's multiple ways to play this game, but when it comes back to it, like, or when it comes down to it, I would say DCA is probably your best approach. Honestly. For all of you. For most of you. There's some people that are profitable traders. Most are not, though, when it really comes down to it. Why don't you think people post P&Ls all the time? You know, like, think about that. They'll show you their P&Ls, like, hey, here's my 30-day P&L. You know, within they'll cherry pick. They'll be like, hey, man, I had this great month. Cool. You know, look at my P&L, yada, yada, yada. Check me out. But, like, are they really showing you their entire portfolio? You know, or they have multiple accounts? Understand that, too. Like, people that have content creators have multiple accounts within, you know, an exchange. You can have 2-3 accounts. You can play it, you know, different ways. Like, you can open up a trade one way, open up a trade another way, and then show a P&L for whichever one wins. There's that goes on. So it's big. It's big for transparency in the space. But here nor there, your best bet in my mind is just when we see these changes, when we are, you know, if you're honoring the 4-year cycle, then you continue to ladder into positions. Bitcoin's not going to zero. That's, you know, I would say solidified in my mind personally. I do not believe Bitcoin is going to zero. So it's just a matter of laddering into positions and lowering the cost basis, and then making, you know, an educated assessment when we start hitting those key levels as it recovers or as it turns around. We've seen it over and over again. Like, and the other thing is too, right? So 30% drawdown, 30% drawdown, 35% drawdown, and retesting the median. You know, that for me is like right in line with the expectation. Right in line with the expectation. And you come back here and you're like, oh, well, 35% drawdown. It's over. Bear market. 56% pullback there. Off the high to the bear market low. 77%. There's a lot of S that went on. We had a real recession. Traditional markets, bear market, all that stuff went down, you know, 2022. Got it. But you had a 50% pullback followed by a 77% pullback. We're only down 35%, or we only went down. We are not down 35%. We're only down, you know, right now, current time. Let's do that measure. Off the high. Nope. Doesn't want to cooperate. There you go. So 27% right now off the high. So yeah, understand there's the structure right now. It's going to be hard sledding, tough sledding, getting over 100K, but you get over 100K, you feel a lot better about the situation in my mind. But structure would indicate continuation of downside pressure right now. But again, I don't think it's over, and I will say that for now. It's not. What do you say? Weekly closes? This is the thing that everybody's looking at right now. Is this 50 SMA and this trend line right here? I know that's what everyone's looking at. Because it's been above the 50 essentially since 23. But yeah, man, I mean, it's your first indications of getting into a bear market. I don't know that we can say that's necessarily reality yet. 50 SMA though, man. Good lord. I can see why people are so rabid about that, because I mean that play has been intact since 2020, honestly. Get below, reject it, and then stay below. That was bear market. Get above it in 23, and then I mean it really hasn't looked back. You haven't had a close underneath till now. So yeah, I mean, I could say, you know, definitely scary times, no doubt about that. But, you know, I will still hang my hat on the fact that, you know, I do believe, you know, that institutional money moving into the market is different than anything we've ever seen before. And I don't know that, you know, that means anything, to be honest with you. But it feels like it does. It feels like it does. I'm sitting here talking about the feels. You know, you guys want the technicals, but we'll see. We will see. And like I said, I mean, if we start losing some of these key levels, like we get down and we set at a lower low, then yeah, man, like for me, it's like that's probably kind of a wrap. Kind of a wrap. You did see a nice push. Like you might look for something just like this, honestly. So what would that look like? Where's the 50 at? It's the weekly. $102. So yeah, I know I was talking about the horizontal level at about 100. But yeah, if you see something like that, it pushes back up, you get that rejection again. You know, does history repeat itself? Maybe. Where's the 21 at? Oh man, eerily similar, huh? Got the high, breakdown below. Yeah, I mean the setup. If you are looking at the 50, that could get weird. Look at that. Get the high, push down below. 21 converging on the 50. It's probably gonna link up here soon over the next. Let me see here. Let's go back to this one. This one took from kind of peak 1, 2, 3, 4, 6, about 13 weeks. About 13 weeks. So yeah, we're just getting started. I mean, we're only 5 weeks into this move. So yeah, I mean, it's a good argument for why I say if you're trading, you know, if you're starting to see some of the structure where it looks bearish, you know, in and out, in and out. Cool. We got JR in the chat. What up, man? Good to see you, dude. Trade Intuition, my man Joe. How you doing? Retro Mike Tech, what up, man? He said there's people with positive P&Ls. It's rare. It's rare, Mike. Those that got in early. Those that got in early. Word bullish on the next 4 years. I don't know, man. I mean, like, it's really tough. And I try not to get too carried away with that stuff. You know, I have my conviction over time, and I've been pretty clear about that. My conviction over time is that I think Bitcoin's a good investment. I think that, you know, DCA into cryptocurrency, or really Bitcoin, you got to be very careful with some of the altcoins. But, you know, to treat it as an investment and to DCA into it is probably the best, you know, idea right now. And right now, if the market's going down, it doesn't hurt you as much too. Like, you don't get wrapped around the charts. You don't get all that anxiety when you're DCAing in, because as you DCA in and there's a downturn in the market, you're just bringing your cost basis down. And let's go to the chart. And I know the ones that are here that have watched me for a long time, I use this example a lot. But let's say you were to DCA the top of 2021, all right? How many people were feeling dumb at buying at 69K? Because let's face it, Everybody said we were going to $100,000. I know y'all remember that. Everyone said we were going to $100,000 in 2021. That's what everyone was saying. So they're buying at 69K. You get a break of structure, cool. And they're like, yeah, we're going to the moon. Woo! Going to the moon. Well, we didn't. Let's go back. I'm on the daily. We did not go to the moon. Not even close. I mean, I guess theoretically, or technically, maybe we did. Over $120,000. That's pretty dope. So you bought 69K, but if you ladder into the position, right? Let's say you buy monthly, weekly, whatever the case may be, and you're bringing your call spaces down over time, right? You go down to the bear market. So say you ladder in, you ladder in, you ladder. Let's do. You do a monthly? I do have a month. Let's do that. Or let's not trading view because you have a damn mind of your own. We'll just go back to the weekly. Whatever. So you ladder into your position, right? Let's just very simply say that you ladder into your position from the top, the absolute top, and then you ladder in all the way down. Simply enough, what was the low here? Somewhere around like 15 or so, 15.5. Let's get a handy dandy calculator. All right. I don't know if you guys will be able to see it, but all good. I'll talk you through it. So let's say 69,000, all right? Plus, let's say 15.5. Just keep it all simple. Got it. All right. So that's 84.5. We'll divide that by 2. If you guys don't remember your childhood math, that brings you to an average call spaces of $42,000. Now that's very generic, okay? Like that's not exactly what it would be because when you're laddering into the position, when you're DCAing into the position, it's not going to be equally, equal segments every time it's going down. There's ups and there's downs in the market. But here and there, simple math puts you at about 42,250. So we'll just say 42. So why I'm such a big proponent of DCA is because then that puts your call spaces right here. 42. Right there. Right about there. Okay? My friends, that's all profit. Now, that does change because you're continuing to DCA on the way up. So your call spaces will be moving to the upside as it's working its way up, but you're accumulating more Bitcoin. And if the trend continues working its way up and right, kind of like the NASDAQ, kind of like the S&P, and it continues to just keep working its way up and right, like you are going to make a lot of money. So that's why sometimes like I'll flip on you guys, but I tell you, like right here, I'm trading, I'm making pretty nice plays, and then we lost the level, and I was like, cool, I'm gonna ladder into my position. Why? Because for me, 4-year cycle, and my mind was still intact, still had the top of the range, still had the 50, still had this, the trend wasn't intact at that point, but we had some confluence here. You had the median of the channel. That's what it was. So you had the median of the channel. And so I just laddered in. I took 3 positions, 1, 2, 3 on Bitcoin, brought the call spaces down here to about 84. And then I wrote it back up and then I took my profits. So there's different ways to DCA. Like if you want to be more active, you can do that. I don't know. Let's look at the weekly though. What's the last time we've had bearish divergence? Yucky. So this was actually, there was some bearish divergence here as well. I remember thinking about that and I'm like, man, bearish divergence on the weekly should have been a nice little indicator. It's not popping on the Prime Oscillator Pro Plus, but here or there, there was definitely bearish divergence there on the weekly. But here, you get some bearish divergence as well, but worked its way up. But let's say, hindsight, bringing it all the way back to current day, if you were to exit when we hit bearish divergence again, look at that. That's funny. So pushed up, consolidation, bearish divergence, pushed up, bearish divergence again, but it ultimately ended up pushing up again. So this is one of the reasons, like, I talk about bearish divergence. Like, it's cool. Like, you can catch some trades with bearish divergence, but you got to be careful because, you know, it doesn't necessarily mean that we're just going to go down and, you know, down and right again. You could for a little bit. Like, I mean, this would have been a nice trade if you would have known when to get out, if you would have took profit at the right place. But, you know, it could just mean that, hey, like, we're cooling off, but, like, there could still be pressure to the upside. You can also see a continuation of trend, even if you see bearish divergence. Like, this one is really still, okay, it flagged a little bit, but just a continuation of trend, right? It's just cooled down. It's an oscillator, and you got to understand that. That's why I prefer open interest in the CBD, honestly. They don't bump their heads. They're infinite. All right. 112. That's a good place to end it. I don't know if you guys remember that group back in the day. Peaches and Cream, I think is what that was their big hit song. Marky Mark in the house. What up, bro? Good to see you, man. We got Andrea in here. How you doing, lady? Good to see you as well. Uh-oh, trade safe, be safe. I guess someone's headed out. Alexandra G. Limp fly. Dang. Really? It's like that? I'm just scrolling through the chat right now, seeing what you guys are doing. All right. Dusty Hunt, Ryan Smith, what up, what up? I'm about to wrap this one up, guys. Thank you for stopping by, though. Appreciate you. My people are clowning me right now. They're calling me Limp Fly and Liquidity. I hope you guys enjoy that. I think TradeFly is saying we don't need expensive trading computers anymore, Mark. No, I don't think you do. I don't. Let me pay for everything. I'll take the hit for you guys. I'll keep doing this show. You can watch me. But you don't. If you guys are just, you know, if you're treating it as an investment, you really don't. Did they have it back in the day in stock and when they, you know, the old school like stock market? No, they were doing it on paper. Paper and phones, man. Paper and phones is all they needed. All they needed. So if you have conviction in something, which I think Bitcoin is something okay to have conviction in, right? I think it's going to be a good investment over a 5-year period. No, you don't need a computer. Well, I guess you need a computer for Bitcoin, but you know what I mean. All the technical analysis you want to do, you can do, but we all don't know where this is going. We are still speculating when it comes down to it. But I speculate higher. Speculate higher over a 5-year period. That's what I speculate. So there you go. All right, I'm going to get out of here. I hope everyone enjoyed the show today. Much love to you guys. You guys definitely got me just going off course, no doubt about it. But here nor there, definitely appreciate you guys. Thank you for being here. It is all love here, no doubt about it. Shout out to you guys. You guys are the best. With that, I'm out of here. As always, trade safe, be safe. I'm out.
Even when you feel low, you can still go. Even when you feel slow, you can still go. Even when there's no hope, you can still go. I never answer to no, man, I still go. Go, 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 yo, go. Hustle hard, hustle every single day. I'll be making moves till I'm buried in my grave. To the system, I don't wanna be a slave. I've been doing shit my way, or the highway. And in the driveway is a nice range. Cause I grind through the climb, I invite pain. You'll never hear me, bitch, nah, I don't complain. Just gotta flip the switch and you can go and obtain anything you want, anything you need. Your mind's got the key ingredient, it's belief. They'll deceive with the negativity, but I just slide right by that energy. slow, you can still go. Even when there's no hope, you can still go. I never answer to no, man, I still go. Go, 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 go. You got a mind, but even that could change. You could flip the gray matter like some batter in your brain. That's why they say, fake it till you make it A. And if you play that game, then you just might make a change. Rearrange all the bad to okay. Take the worst thoughts saying, turn them to a game. Take the best thoughts saying, put them on display. On repeat in your brain till you're feeling no more pain. Never slow yourself down, you can do some more. Push past all the pain and you'll find a door. Open it up and finally explore everything that you thought you could never do